Alright guys, Nick here from Velocity Trading, and in this video I'm going to teach you guys how to properly scale on your trades. So highly requested video. This is something I've been working on improving myself every single day. So I'm happy to make this video and try to help you guys out here. Alright, so first let's go over why scaling is beneficial, right? So why scaling is beneficial. So kind of 2 points here, why it's really beneficial, and then like the last video I did, I just kind of threw some tips out on each little slide, right? So number one, having that flexibility on that early starter, right? So when you have that early starter, right, you can be flexible, right? It's a starter position, right? So you're not in big, you're in maybe 1/10 or even like 25% of your max size potential. So let's say my max size on this trade is 10,000 shares. Maybe I'm in 1,500 right now. Maybe I'm in 2,500. I really don't think an early starter should be more than like 25% of your max size, in my opinion. So I think 25%, is probably the max, like a starter position. I would say anything more than 25% is not a starter. So, I see so many people saying, and I do a lot of one-on-ones too, right? So a lot of people saying, oh, Nick, I was in an early starter here. I was like, all right, well, how many shares were you in? Well, I was in, 2,000 shares. I'm like, well, what's your max size? Like, oh, 3,000, so, I had some room to add. I'm like, that's more than 50%. That's not an early starter. I mean, that's a big position for you, right? So, it's an early starter, right? So I want to jump to this point too. A starter size position it's really like a test trade, right? So it's just the thesis to see, it's just a test to see if your thesis is right? So you should only add, once, their thesis is proven right. So please stop taking big size on your starters until you have confirmation, right? So again, a starter, just a test trade, small size, just, feeling it out a little, seeing if your thesis is going to be proven right. Then once it is, all right, then, go look to maybe, add some size here and, scale in. So, I keep seeing a lot of traders, get confused with that, right? So, and remember that trade, not gonna have a high winning percentage, right? Because you're still early there. You're not in, you're still early to the trade, so it's not gonna have the highest winning percentage, right? But next, it gives you a little room to add while minimizing risk still, right? So, oh no, I skipped the point. Yeah, so paper cut losses, right? So the best thing about early starters is that you're there early, so let's say it doesn't work out. You're walking away with a minimal loss, right? You're walking away with, maybe like a, not even not even 1 R, right? Maybe a 0.5 R or a 0.3 R. So, that's a nice thing about early starters. Next, you have room to add, right, while minimizing risk. So, let's just say, I don't know. Let's just say, for example, you were looking. You're looking for, I don't know, let's say SAX. I'll go over some of these examples I have. SAX, let's say, your early starter, right, was, into, parabolics out of the open. So let's say, all right, my thesis is on this. Let's see to get back its gains, right? So I would like to scale in any early starters between 340 to 370, right? So you have that room, right? You have some wiggle room where you could dabble in maybe, maybe your max size is 10,000. You could dabble in maybe 1,500 shares into here. And then maybe one more add, at 365 or 370. Ultimately risking 375. That's a good way to properly scale in a front side short. And I'll go over that slide too. So that's a good way of managing it, right? So you're still 3,000 shares. Where let's say if it does break over 375, you're in there small. So it gives you that flexibility, right? It gives you that flexibility. And then as it starts to fail, confirm, you can look to add in that big size while minimizing your risk, right? So that's what's good about it, right? It gives you that nice flexibility, room to add. Just right there, short side. You be there early with room to add. So that's number one. Why I think scaling is beneficial, giving you that flexibility. While being able to take those paper cut losses. The only negative is that the winning percentage is going to be a lot lower, right? Two, I can leave the massive R's with low risk, right? So, like we said before, right? Like we just said, so, you're there, small size, and, once you get those add-ins, now you're adjusting your risk, and, now you can really start to be, you know, a little bit more aggressive, right? Because you have a higher average, you got in there early, you can be flexible, and you know if it follows through your way, long or short, it could lead to some massive R's with low risk because you're still, you know, you have a higher average or a lower average, you know, depending on your long or short. So it could lead to those really big R's, right? And that's what we made the last video on, right? Why we threw scaling as a way to really consistently start averaging those big days. So, you know, that's the second point there. Went over this, and then I threw this in there too, right? This is a good point. I may have made this on the stream one day, but you should think, you know, each ad should be seen as a trade within a trade, right? So don't just add just because, you know, oh, I'm in the green now, let me just start adding. Nah, you shouldn't just be add, right? You should be, you know, start to add, you know, if you think this is, you know, a trade within a trade, right? So, all right, it's failing this level here, failing. This, I think this is another good trade. So, you know, take it, right? Take that ad, right? Don't just add because it's coming down or it's going up. You know, always pre-plan your trades, and try to pre-plan those ads too. Where, all right, let's say, you know, SAX, I my goal was 350s, 370s a short. With my goal is to add if $3 fail, that would be another trade within a trade, right? And then, all right, $3 fell, and now, you know, let's say, you know, maybe 290 starts to break down, and now we're seeing really fail follow through. That's when I'm gonna want full size, right? So that's how you should be adding. You shouldn't be adding because, you know, you nailed the top and now it's coming down a little. Doesn't mean you should add, right? You know, so always see it as a trade within a trade when you're adding, right? So now it brings us to this front side, shorting on the front side, right? Always got to be careful on the front side shorting. But, you know, if you want to scale, the reality is you got to be there a little on the front side, right? If you want to get those R's, you know, you got to be there a little on the front side. Doesn't mean you should be 50% on the front side. Maybe, you know, 35% max of your full size on the front side, and then always look to add on the back side, right? So once again, you know, always pre-plan your entries. You know, note your key levels. Respect your risk on the front side always. And, you know, again, don't get too aggressive on the front side. Always wait for that backside confirmation to add full size. So, and I kind of threw some points in here on you know, I kind of, you know, threw the same point in there. I think I had that on every slide. And then, wait, is this, oh yeah, I was going to say, what happened there? Yeah, so, you know, I threw a point in here, on, you know, when's the best time to, you know, really scale on the front side. And, you know, I think the best time to do that is when, you know, demand is peaked, volume is peaked, and, you know, volume has become weak versus a ton of supply. So always look for, you know, stocks to short, you know, that has a lot of dilution, a lot of bag holders. You know, that creates that imbalance, right? Especially when demand's gone, you know, creates that supply in demand imbalance when there's just too much supply, not enough demand. You know, all trading is, guys, really come down to, you know, supply and demand. So, you know, those are, you know, the best ones to really scale into on the short side, because there's no one left to buy, right? There's just a bunch of sellers looking to slam the bid. And like we said, you know, heavy dilution plays, bag holder charts, and stocks that have a big history of giving back those gains are the best ones to look for those fades. So, you know, just I think I threw in a long one too, just kind of throwing out there, you know, when's the best time to really, you know, look to scale in, and, you know, what stocks are good to, you know, short or long. So, you know, here SAX, just going back to the example once again, you know, goal was this, you know, 350s, you know, it was what was it, 340s or 370s. I'm not really gonna go over just, you know, the whole background of the trade, just giving you guys examples, right? And maybe I'll just pull up another example just to kind of show you guys, you know, what I may mean, right? So, you know, SAX, so 340s, 370s. I'm willing to risk 30% on the front side. So if I take a loss, it's minimal. I'm not going to add unless, you know, it starts to confirm my thesis. And then, you know, started in here. And I actually took this trade too. Came back down, you know, added as $3 failed. And then added the rest if 290s failed, right? That confirmation of follow through. You know, SAX is loves a fade all day. So that was the trade on, right? That was the trade on it on on SAX, and obviously your stop's going to adjust, right? So, let's say you had a 340 30% size, or let's just say, let's just say 30%, make it easier, right? And then maybe you added, 20%, now you're at 50%, that's $3 failed. Now your risk has come down a little bit, right? So you're no longer risking that 375. Your risk has to come down as you add size, right? So you can never have that same risk. You always got to be, adjusting your stop, adjusting your risk as you add. And then once that 290s failed, is now adding, or whatever it is, 280s. I'm sorry, guys. So whatever 280s failed, now you're in full size. So now your average may be, not the best at math, maybe let's just say it's 305, right? So now you're in 305, max size, 10,000 shares. I don't want to see us getting back over 3, and my average is 305, so I have a break even. Eventually, you want it to be a break even. Once you're in full size, you want to be in full control of the trade, and usually when you get that full size add-on, your stop should be now at break even, right? So you don't run that risk. That's the best thing about it, right? I see so many people in full size, and they're not even that well into the money, right? You should be, when you're in full size, you should have that stop at break even, or you should have a very tight risk, 5-10 cents max, because you're in big size, right? You don't want to let it go against you on your biggest size, right? And that could be disastrous, right? That's where we take our biggest losses. We jump in full size, right away. You should never jump in full size right away. You should, scale into that full size position, right? So that's something very important too. So many traders are just jumping in full size and they're getting crushed. So you should really only get to that full size on an 8+ setup, of course, and scale into that full size, right? Don't just jump in, 5,000, 5,000, 10,000. Now I'm risking 20 cents, right? And then now my risk is 2,000, but my average R is 1R. So always try to get that 1R, right? Always get that 1R risk in your trades. So yeah, very key right there. And just another example, right? I mean, you could really go over any, but let's just say for whatever reason, I personally wouldn't have. Actually, I won't go over that one. Let's just find a stock real quick. All right, UAVS, not a bad example actually. I don't know. Let's just say you have a short bias on UAVS, whatever it may be. Maybe you're not impressed with the volume, a lot of dilution, some bags in here, whatever reason you don't like UAVS, right? So let's just say your goal is, start into parabolics. I'm looking at the daily, looking left, right? We like to look at left. I see 160, it topped out on a 62 million share day. Why is this up? No news, whatever. I don't know, whatever it may be, whatever reason you want to short it. So we could eye, parabolics, right? 150s to, just 165, right? So, if it starts to break over 150, you could look to scale in a little bit there, 150s, 160s. And you think UAVS, potentially come back to, 110, 120s, starting a little bit there. Wait for a key level to fail. So I see 130 as a key level. So maybe start in, 30%, 150, 155, 160. Then as 130 start to, stay heavy and fail, look to add some more. Then 120s crack. Now I'm in full size. Now I'm looking for $1. And then maybe end of day or maybe tomorrow. That's just an example, right? Just examples of maybe how to scale. So I really think the best time to scale front side is, it really depends on your setup, right? Maybe it's a gap and crap setup. You want to start a little in pre-market, right? So, I had a trade this morning on the short side in pre-market. And a lot of it does come down to, your setup too. CREX, I had a pre-market short, right? This was a bag holder short setup, day 2 setup. Bids were gone, volume wasn't here. Goal was to look, after I saw weakness, no bids. Goal was to short versus $4 for a fade back down to 280. So opened up here, so far was going as planned. Weak pre-market, no bids, lack of volume. So started in a little here, 350s. Thinking maybe it fell 325s I could add, and then add below $3, and then look to cover 280s, 270s. Didn't. But I planned for that, right, in case it does, come up to 370s, 380s, I'll look to add, right? So, as we came up to 370s, 380s, I added. Still in about, I think I was about half size at this point. So I was in around, 40, I was in around 4,000 shares at this point, or 4,500 shares. and then goal was this 350 crack to add full size and and set my risk back at around my average or close to my average, right? So originally I had a $4 risk, right? So I was risking $4, but the goal was to add. So my average came up to around 370. So it was around that 370 average, around half. So I was risking about 1 hour on the trade, risking 30 cents on about 4,000 shares. So my average R is 1,300 right now. So I was risking 1,200, right? 1 hour, good risk, 1 hour risk with a nice 4 or 5 hour potential trade if I could get my ads in, right? So fell this 375 mark, came down in 350s. I think I added a little bit here, and then I added the rest here. So now I'm in max size, right? Now I'm in max size. My average came down, and now my risk was like 5 cents at the time, 7 cents at the time. So with 8,000 shares, it averaged around like a 1 hour risk on it still. So, and it worked out, right? So that's how I scaled into this trade on CERX, and you can really do that for all your setups, right? See where you could start to scale and average in, and where you could add and when to add. There's a lot goes into it, but you gotta do your homework, right? Look at your setups, see how I could potentially scale my gap and crap setup. How can I scale my wash, trap, and squeeze pattern, etc. Right? So, we'll now go into how to scale on the long side. So we'll go over the CAPR example, and then we'll wrap up this video. So scaling on the long side, pretty much the same thing, right? Pre-planned entries, map out your key levels, because you got to see where you want to scale, and what levels are going to be key. So, obviously, I said wait for confirmation, add full size. Should never really be in there full size until, a key level starts to hold and confirm to your thesis. And, I just kind of went over some points. So I said the best starter is really near a backside line or after a basis form, right? And I'll show you an example. So I said, next would be a higher low. Third would be a reclaim of your key levels, right? And I'm kind of referring to the wash, trap, and squeeze pattern. Obviously, you guys may have your own setups. But I'm just really referring to the wash, trap, and squeeze pattern, right now. Maybe, if you have a multi-day long, maybe, you scale out differently, or, washout long, maybe you scale out differently. I'm just going to go with wash, trap, and squeeze pattern. So once again, kind of went over the factors for the shorting. Best longs are high IO, former runners, micro floats, easy to borrow stocks, few bag holders, minimum dilution, and high volume names. So those are stocks like to look for on the long side. So CAPR met a lot of boxes, right? PR came out, a lot of volume. So this one was a little bit quicker. Came on up, ramped on up, came back down. You could see. I actually wasn't focused on this one out of the open today, but so I didn't really have a backside line, but maybe you guys could have determined, if this cracks, $4, this is backside, right? You kind of see the over under there, reclaim $4, so this could have been a potential starter, right? Seeing I had really high volume early on, potential starter, $4 versus 370s, add on a higher low, so that could have been your entry right there. Adding on a higher low, around 450, 440s, and now the big level, right? You guys could see, right? This is pretty noticeable. $5 is a key level, right? This is probably where a lot of shorts maybe averaged in. This is where we had support, now acting as resistance. So you guys could see $5 failed, so now it's a key line you're gonna want to map out. So I wouldn't be full size into this trade on the long side until $5 reclaimed, right? So once $5 reclaimed, we held. Had a big spike on up, right? So that could have been your starter. Maybe added to half size around here with a new risk. Now you're no longer risking that backside line. Maybe you're risking $4 or $4.10. Now you're in there adding full size as $5 holding, and adjusting your stop, right? And never really cracked $5. Ripped all the way up there to $7.50. So that's how you can really scale that trade. Also go watch, look at some of the charts. You guys are in Discord. Look at some of the charts on Watt. That one had a really good scalability on it. Look at WORX. That one you could have scaled very nicely into. And that's gonna be it for this video. This is just my take on scaling. I know some people aren't the biggest fan of it. Just my take on it, right? Some people like those one bullet, one exit type trades. And I do have certain trades where I go one bullet, one exit, right? Not every trade I'm going to scale into, but I do want to get into a habit of starting to, scale on certain plays that I think, have higher potential to run, right? So definitely not every trade is scalable. Maybe you could argue that, but just going over, how to properly scale. And I think this is the proper way to scale on these micro floats, these shorts, these longs. So short side, look for the, once, demand peaks into parabolics, have a set area you'd like to scale into. Then as we fail key levels, add a little bit more. Then once backside confirms, add some more. And then long side, just went over that just a second ago. But yeah, that's going to be it on this video, guys. If you have any more questions for me, you guys know where to find me. And yeah, I'm going to end it here. So hope you guys enjoy the rest of your day. Peace.